Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 11th of July 2025. First chart is the US Dollar Index Futures, which you can see closed slightly higher this week. The market did test for supply early, which isn't surprising, just in here, and then it pushed higher in response for the week. I'm not sure this market will prove strong enough to push its way back into the longer-term trading range, but it's not surprising following last week's bar that the market has attempted to push higher this week, and I expect it'll find resistance, and pretty strong resistance, at the breakdown line here, which forms the lows of the trading range, and I expect the market will probably fail there and turn around and close poorly. This week's bar moving higher did put some pressure on some of the associated markets, which you'll see in the charts to come. The next chart is the E-mini S&P. This is S&P 500 index futures. The market moved back through the range of the previous bar this week as an inside bar. Volume was below average. It was increased over last week's volume, mainly because last week's volume was a shortened trading week. This week's trading was really a test for supply, and the market did find that supply was relatively low and well below the average. This sets the market up for an attempt to push higher when trading conditions are more favourable. US Treasury 10-year note futures continue to trade within the range of this widespread down bar. Price moved lower this week and below this little intermediate level inside the overall range. No huge amount of damage done. Volume was very low, even lower than the previous week's shortened trading week. So selling pressure certainly isn't an issue here, and the market just drifted lower on low volume. I expect this market will continue to trade within this range for some time, and it really would take either a break below the lows or above the highs for the market to really start trending again. Copper price futures. Copper price futures moved high with an exaggerated spread this week on economic news that was released. The close well off the week's high shows you that supply was drawn out. This market had been showing some strength previously down in here, and it wasn't surprising that the market did push higher, but it was surprising that it had such a wide spread. So I would expect there'll be a period of consolidation in response, probably in like this for some time, while the market consolidates for a period in response to the very wide spread this week. Volume was increased and slightly above the average, but not excessively so. So I don't think that the supply drawn out was really overwhelming. It was more that the market overreacted to the economic news that was released, and that's caused the market to close well off the week's high. The next chart is gold price futures. Gold price futures spent most of the week in consolidation mode again, testing for supply below the previous bar's close in here, and it just floated higher on a lack of selling pressure towards the end of the week. The market is consolidating sideways following a pretty strong run. There's no serious supply being drawn out at this point, but the market does need to just consolidate for a period and solidify the recent gains, because it really has moved quite a long way higher in a relatively short period of time. Price does look stronger than weaker at this point. Whenever weakness does emerge, reasonable demand comes in almost immediately. So if the market was to move, I still believe it would be towards the upside and not towards the downside at this point in time. Silver price futures are playing catch up to some extent to gold. Silver price futures broke out 6 weeks ago, spent a month in consolidation mode, and have now pushed higher again, effectively breaking out for a second time. The market did fall a long way behind the gold price futures. So this is really the market playing catch up to some degree, and it's doing so pretty strongly. You'll note that when price originally broke out on this bar, the consolidation took place right up high in its range. That's a real sign of strength for a market. That just shows you that when the consolidation took place, any supply that was drawn out was quickly bought by the market, holding price right up high in that bar's range. And that is a good indication the market is strong and it will break out again at some point in the future, and that's exactly what's happened. Once this momentum begins to ease somewhat, I would expect the market to once again consolidate up high in the range. And the depth and duration of the period of consolidation is also a good indication of the underlying strength of the market. Light crude price futures closed slightly higher this week. The market's trading above this breakout line here following the economic news that developed these exaggerated spreads. The market is moving slightly higher. There was a test for supply early in the week below the previous bar's close, and price really just floated up on a lack of selling pressure to close as a slight up bar for the week. It's trading within the range of this widespread down bar. It certainly doesn't look weak at this point, but it's not looking particularly strong either. It's just floated up higher this week on below average volume with pretty average spread. So I think the market's comfortable where it is at the moment. It doesn't really look like it's going to go a lot higher, at least not in the near term. If it did, it certainly wouldn't go much higher than that level with ease. And it seems as though there's support in here at the lows of that down bar. So the market's going to trade within those two levels, barring any unforeseen circumstances. Into the currencies now. This is the Euro-US dollar currency pair, which traded slightly lower this week. Almost the exact inverse of the US dollar, which isn't surprising. This market does trade the inverse of the US dollar far more than any European Union fundamentals. So the market has moved slightly higher up here when the US dollar was testing for supply. Then as the US dollar moved higher in response, this market's moved lower. I expect there'll be reasonable support found at this level, and the market will probably move down towards that level prior to finding that support down here adjacent to the recent breakout line. This is British pound currency futures. They've been acting stronger than the euro more recently, and with the recent strength in the US dollar as it attempts to push higher, this market is moving towards the downside a little further than the euro is. Here's where the euro is expected to find some support. This market has already broken slightly below that level, and I expect it will trade in this range here for some time, finding the support at the previous highs. Volume was reduced this week and well below the average, so similar to the euro, selling pressure isn't overwhelming, it's just drifting lower on relatively low volumes. Japanese yen currency futures did break below the lows of the previous support here this week. Here's where the market closed, below those lows. That's a pretty poor sign unless it can reverse next week. So I would expect the market to come back to these sort of levels in here if support can't be found and a reverse will take place next week. A break like that below the previous support would suggest this market's going to probably drift lower. We'll just see how that plays out. If the market did reverse, it would be effectively a 2-bar reversal or a little mini shakeout in there. So we'll just see how that plays out. If the US dollar does weaken as it moves higher and come back again, this market may just recover. It's certainly vulnerable though. Aussie dollar currency futures continue to show underlying strength, actually surprising strength to be honest. Despite the US dollar moving higher this week, this market didn't really move lower. It's pulled back and then recovered all the lost ground to close adjacent to its previous close. This market's looking stronger than weaker and perhaps stronger than the other currencies we've just looked at. If the US dollar did weaken further, I expect this market will really attempt to push higher. This is Bitcoin futures. Bitcoin futures did test for supply early in the week, as suggested last week, and then it did push higher and challenge the highs of the range, which was also suggested last week. Spread was wide. Volume increased to about the average, which suggests the trading was genuine. There's no anomaly in the trading. So it's a genuine attempt to break out here, and it's looking pretty strong. You can see this bar standing tall and proud with the close right up near the week's high. It's a good sign of a strong market. This market has traded very clearly. It's been understandable the whole way. Now I expect there'll be some early momentum next week, and then the market will probably have a period of consolidation. The higher in the range of the up bar the consolidation takes place, the stronger the underlying sentiment is in the market. And the depth and duration of the period of consolidation is also an indication of underlying strength. So a shallow pullback and a relatively short pullback would suggest further underlying strength. A deeper pullback that takes quite some period of time to take place would be slightly weaker. So keep your eye out. Once this momentum has begun to ease, keep your eye out for a period of consolidation, similar to what happened back here. And the higher in the range the consolidation takes place, and the depth and duration of that period of consolidation will all be indications of the underlying strength or weakness in the market. Everything's looking pretty strong and good at the moment. Now, just back to the US dollar index futures quickly before we close. You can see in response to the bar 2 weeks ago, which saw spread narrow and the close back up near its high, someone taking the form of a test for supply indicated the market was probably going to attempt to push higher this week, which is exactly what happened. I don't think this market is going to be strong enough to recover back above the lows of the range here, although that remains to be seen. I expect the market will probably push a little higher early in the week, be overwhelmed with supply or a lack of demand, and the market will turn and move a little lower next week, which would in some respects confirm a failure to recover. And then we'll see the market push down to this level, perhaps the following week. So it's looking a little weaker than stronger. And you can see on the previous charts we've just looked at how that effect that has in those markets. Okay, thanks for your time. Sorry about my croaky voice. We should be back again next week, no worries. See ya.